In today's episode, we uncover the shocking story of PricewaterhouseCoopers, PwC, a scandal that rocked Australia and exposed a web of tax evasion and corruption. Join us as we explore the PwC scandal, known as the Australia tax leak, and shed light on the questionable practices of one of the world's largest accounting firms. The rise of PricewaterhouseCoopers. PricewaterhouseCoopers, commonly known as PwC, emerged as one of the Big Four accounting firms, gaining a reputation for its prestigious clientele and expertise in financial services. With a history dating back to the 19th century, PwC grew into a global powerhouse, providing audit, tax, and consulting services to corporations and governments around the world. However, beneath the facade of professionalism, a scandal of epic proportions was brewing: the Australia tax leak. The Australia tax leak scandal erupted in 2017 when confidential documents were leaked to the media, exposing PwC's involvement in aggressive tax avoidance schemes. These leaked documents, known as the Paradise Papers, revealed how PwC had assisted multinational corporations and wealthy individuals in diverting profits offshore to minimize their tax liabilities in Australia. The revelations sparked outrage among the public and led to intense scrutiny of PwC's practices, questionable practices, and ethical dilemmas. The Australia tax leak shed light on the ethically questionable practices employed by PwC. The firm was accused of designing complex tax structures and utilizing offshore tax havens to enable its clients to evade taxes legally. While such practices may not have been strictly illegal, they raised serious ethical concerns regarding fairness and corporate responsibility. PwC's actions demonstrated a lack of regard for the social and economic consequences of aggressive tax avoidance, undermining public trust in the integrity of the accounting profession. The fallout and public backlash. The revelations of PwC's involvement in the Australia tax leak scandal had far-reaching consequences. Public backlash was swift and widespread, as citizens and policymakers demanded accountability and transparency. The scandal highlighted the loopholes in Australia's tax system and exposed the significant loss of tax revenue that could have been used to fund public services and infrastructure. The public's perception of PwC was tarnished, and the firm faced a crisis of reputation. Legal and regulatory actions. In response to the scandal, regulatory authorities launched investigations into PwC's conduct. The Australian Taxation Office, ATO, scrutinized the firm's involvement in aggressive tax avoidance schemes and imposed hefty fines on PwC for facilitating tax evasion. The government also initiated reforms to close tax loopholes and strengthen regulations surrounding multinational corporations and their tax obligations. PwC was compelled to reevaluate its practices and enhance its compliance measures to restore public trust. Corporate culture and accountability. The Australia tax leak scandal raised questions about PwC's corporate culture and the accountability of its senior leadership. Critics argue that the firm's focus on maximizing profits and catering to the demands of its high-profile clients had overshadowed ethical considerations. The scandal exposed the need for a shift in corporate culture, emphasizing the importance of integrity, transparency, and responsible business practices. PwC faced immense pressure to address these issues and rebuild its reputation by fostering a culture that values ethical behavior and social responsibility. Impact on Australian society. The Australia tax leak scandal had a profound impact on Australian society. It ignited public discourse about income inequality, the fairness of the tax system, and the role of multinational corporations in shaping economic policies. The revelations prompted widespread calls for greater tax transparency, stricter regulations, and a reevaluation of the country's tax laws. The scandal also eroded public trust in the fairness and integrity of the business sector, leading to a renewed emphasis on corporate accountability and ethical conduct. Lessons learned and the path forward. The PwC scandal serves as a stark reminder of the dangers of unethical practices and the need for stringent regulations in the accounting profession. It exposed the flaws in the system and the need for greater transparency and accountability to prevent similar scandals from occurring in the future. The incident also underscores the importance of corporate social responsibility and ethical decision-making. Companies must prioritize the interests of society and the communities in which they operate over short-term profits. As we reflect on the PwC scandal, known as the Australia tax leak, let us remember the consequences that arise when corporations prioritize their own financial gains over ethical responsibilities. The scandal exposed the dark side of one of the world's largest accounting firms and ignited a national conversation on tax fairness and corporate accountability. Join us next time as we continue to uncover captivating tales of corporate scandals and the lessons we can learn from them. Remember, knowledge is power, and only through understanding can we forge a better future.